Hello and welcome to this May 17th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Legg Mason, ticker symbol LM. This is a $5.5 billion financial company. They are a diversified global asset management firm. And they also work with both individuals and institutional investors. Legg Mason, you can see, actually has been in a pretty nice pattern. This is a 6-month chart, and especially coming off the February lows, you can see that we bottomed down near the $24 level, and we have continually been moving up since. Recently, actually Tuesday of last week, saw a big gap up, nice volume on this gap up, and we continued moving higher. Now the gap up got us close to breakout, didn't quite get us up there. The next couple of days, last Wednesday and Thursday, we did actually make the breakout, but notice the volume had tailed off a little bit. Still pretty strong volume, but it tailed off a little bit. And then on Friday, check out this bearish engulfing candlestick right at the top here. So a couple things that bother me on the stock here. Overall, I think it's a nice looking pattern. I still think that in time we could see higher prices on Legg Mason, but the short term bothers me. Number one, because we do have this reversing candle at the top. It was on some pretty decent volume, and this Friday options expire. And taking a look at the max pain point, that's the point at which in the money calls offset, completely offset in the money puts. So you come down to a net zero value. That point is at 29.92, and you can see this gap support, the bottom of gap support, is at 29.95. So it wouldn't be a shocker to see something come up during the week where Legg Mason maybe pulls back a few dollars. On the way down, I'd look at a couple of areas. First, you're going to have the top of gap support just above the $32 level, and also with the MACD pointing up here, normally you're going to get some support at the 20-day moving average, which is at 31.73 and climbing. So look to the downside right around 31.75 to $32 for initial support. If Legg Mason were to close back beneath that level or those levels, then I think it would open up the door to perhaps heading back toward max pain and the gap support level just under $30. To the upside, if you do short, I would look at the open on this bearish engulfing candle, which on Friday was at 34.34. That would be my stop on any closing basis, especially if volume picks up on that move. So in the short term, this one looks like a possible short candidate, but further out, I actually like the overall trend here, especially off of this bottom in early February, and I think that Legg Mason in time could head higher. It's just a short term that I think could be a little dicey. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.